Hello, and welcome to Dohnatien Investment. This analysis is for Whitecap Resources on the Toronto Stock Exchange as of 2nd of July 2026 with a share price of 14 Canadian dollars 56. The full report is on dohnatien.ca. Short term, this is a hold. Timing is only fair, and the oil price, not the company, sets the near-term path. It is a cheap, high-quality producer and a medium and long-term buy, so accumulate on weakness rather than chase. Start with the business because the quality here is scale and staying power. Whitecap pumps around 390,000 barrels of oil equivalent a day, about 61% of it higher value oil and liquids, from Alberta, British Columbia and Saskatchewan. Last year's roughly 15 Canadian dollars BN all-share purchase of Veren nearly doubled the company, leaving it with about 2.2 billion barrels of reserves and a reserve life beyond 16 years, one of the longest runways among its peers. The one permanent limit is the moat. Like every producer, it does not set the price of what it sells. On value, it looks cheap and it pays you while you wait. Valuation scores 66, attractive on free cash flow yield and against its own history. The company returns that cash through a monthly dividend of around 5%, topped up by buybacks. One important note on the numbers, last quarter's reported profit was dragged down by a large non-cash hedging loss, so we score it off free cash flow and operating cash flow, not the headline net income. And on that basis, the business is comfortably cash generative. The catch is timing, and it is why the short term is only a hold. The stock is a geared bet on the oil price. The driver sits neutral at a mid-cycle crude level, and short-term timing scores just 52. Our base case assumes WTI around 60 Canadian dollars to 68 Canadian dollars, 3 to 5% production growth, and a modest re-rating towards 17 Canadian dollars and 50 cents. But the same leverage cuts both ways. A sustained drop in oil would hit cash flow and the share price quickly, which is what the bear case, near 11 Canadian dollars and 50 cents reflects. So accumulate on weakness rather than chase strength. Now, the other side of the ledger. A sustained oil sell-off takes it toward the bear at 11 Canadian dollars and 50 cents. It is a price taker, no control over its main input. A deep, prolonged crude drop could pressure the dividend, but low costs keep it free cash positive across mid-cycle prices. So, our call on Whitecap Resources on the Toronto Stock Exchange, hold. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Dohnatien Investment at dohnatien.ca. The link to the full report is in the notes below. Have a great day.